Hey there, Josiah. Hey there, Josiah. Can you hear me?
Hey, what's up? I'm good. How about you?
Man, I cannot complain. Happy Tuesday to you.
Yeah, you too, bro.
How's your day treating you?
Pretty smooth, So
Mm-hmm.
the day's been going by pretty fast.
Mm-hmm.
I was with you guys like a few months ago,
Mm-hmm.
but then I had stopped paying. But like I had really learned a lot, you know what I'm saying, from the course. But then I seen you guys actually drop the course on YouTube. Like I seen that like 2 days ago.
Yeah, we introduced the course on YouTube because we wanted to make it easier for more people to get access to trading education. But what we structured it so it's now that we have our premium community, so that we can focus on one, you'll get access to the indicators in our development, so that way we'll be able to help you with your trading. But then also the other piece too is that we have set up these calls so that way you can ask questions, get things answered, just be able to access to other traders that through our coaches and our student leads that have experience in trading. You're gonna be able to help answer some of those burning questions that you have, help you to figure out the mistakes. I don't know if you got to see the inside, like for instance, our losing trades chat, our winning trades chat, or our questions. People are always asking things that they're needing help with when it comes to their trading. So we want to make sure we can be able to help people and make it more affordable, right? Because there's a lot of it. Be honest, man, there's a lot of education on the internet, but it's the way we package it that makes it help you, right? Because let's be honest, if you could learn trading just by watching videos, then what would stop you from being a surgeon just by watching videos?
Right.
Like a doctor, a pilot, all this stuff. You can watch as much theory as you want to. You can watch the videos. If you're not getting your hands dirty doing the work, if you're not asking questions to people that have had more experience or more years in something before you, you're just going to take long to get to the process. So it's not really the education itself. I mean, we try to explain as many concepts we can on YouTube, but the real secret sauce is you coming here, asking questions, getting feedback, being able to see the value of that feedback, being able to constantly iterate and make changes, because every person that I could think of that take advantage of the resources that we offer, between when we had backtesting calls and these calls, stuff like that, they grew over the course of 6 months because they were applying themselves forward, like it's not
Exactly. Yeah.
like, yeah, if the real secret was watching the video, then we would just tell you, go watch the course and then you'll be a master trader, but that's not realistic.
Yeah, yeah. Facts. You guys still do back testing on Sunday?
We haven't been doing the backtesting calls, but I'll let you know once we'll get that started back.
Okay.
So, hey, Pete Bunny and Calvin in the house. Happy Tuesday, guys.
Hey, what's up?
How's it going, my man?
Nothing too much. I'm finally feeling rested after a long, busy weekend. So, yeah. Talk to me, guys. How's the markets treating you? I hope it's not beating up on y'all.
So it's not. I have my direction down pat. My patience has grown, and I don't know why. I see that it's grown, especially more that I have that MT4 indicator where I have a certain amount I can lose a day and then it shuts off. So I take better trades. And I also raise my lot size, like I do. So I'm like, I take better trades, because I don't want to be stopped out for the day. Because I also have a certain amount of trades for a day too. It's 4. So I don't care if I break even, that's still 1 trade for the day. So my risk management has been much better. But I just want to see, how could I have caught all this gold today? Can you open your chart on gold and see what you would have done today?
Sure.
Oh, it was booming, but I only got 1 hour out of it.
Oh, sorry, guys.
Yeah, what the hell are you looking at?
Interest rates.
Oh, U.S. interest rate. Okay.
Yeah, Yeah, they actually have a whole bunch of stuff that you can find. Like you can find the total balance sheet for the United States. So this is what happens when they gave all that money to the banks deposits. You can find all kinds of they have all kinds of different volumes, stuff like this. I forgot what this one is.
Yeah, trading view is no joke.
Yeah, it has a whole bunch of stuff. There were some other things. Federal liabilities. Where are all my names? Oh, wait, here's the
This
question.
cannot be traded, right?
It can be traded, but you see, for instance, this is what I talked about. This is what happens right now. We're at a 4.75 interest rate. Tomorrow's expectation is that we'll get to about 5.0. The range that the Fed said we'd be between 5.0 and 4.75 or 5.25. This is where the markets want us to stay, somewhere in this yellow. What they fear is we're going to get to the red. So what markets want is they want for them to stop lowering rates somewhere between October to really June. They want to start seeing rate cuts. But if you see this red line, that's the trajectory that the Fed kind of expects, is that prices will start being raised. The rates will start dropping somewhere in April. What the market's fear is that tomorrow the Fed's going to say we're going to be somewhere between 5.25 and 5.50, and we won't really get to a lower rates until probably 2026. But this is what we're watching for tomorrow. So let's see what we get.
And that is called basis points, right?
No, basis points is just 0.01. So it's just 0.01%.
Yeah,
that's a basis point.
So they say they're going to raise it 0.50 basis points, right? BPS, right?
Yep. So that's 0.5%. That's
okay.
50%.
Okay.
0.5%. I'm sorry.
Okay. And what is this interest rate for? What is the interest rate on?
Interest rates on money that the Federal Reserve is giving out.
Can you say an example?
So you start a bank, you raise up $1 billion, and you want to be able to offer loans to people. You can go to the Federal Reserve and get them to give you up to $10 billion. And there's an internal rate between banks that they have to pay an interest cost.
Okay, so this is only for banks.
Yeah, but because it's for banks, it affects every single thing you do. Credit cards, have you noticed that you start paying more in APR? Home loans, you've noticed that they're a lot more expensive. Let's see what else. Auto loans, you notice that they're expensive because they're borrowing money. They're using money to sometimes, or they borrow sometimes money, depending on what type of home loans you get. And this is one of the reason why rates will go up, because the cost of money borrowing internally has gone through the roof. But also on the flip side, this is why you got bond interest rates as well too. So where were the bonds at? Oh, sorry, wrong chart. Where is my fixed income? There we go. So if you buy a government bond today, the interest rate that you'll get paid is 3.6%. If you hold that bond for 10 years, you'll continue to get 3.6% as interest payments. Whereas if you did what some other banks were doing, they were buying bonds when they were 0.5% interest rates. And the problem with that is that when somebody can go buy a new bond for 3.6%, but you want to get rid of your 10-year bond that you bought at 0.51%, you have to sell it at a discount, because nobody's going to want to pay for an asset that's not yielding as much as the market value. So all these things are very much important for you to kind of know what's going on in the market. So the reason why things have been choppy and then things have been jumping is because they're waiting to see what expectations happen for tomorrow. That's why gold's doing the moves that it's doing.
So the banks get charged the interest rate from the Federal Reserve. Then if the banks get charged high, that trickles down to the bank charging home loan interest rates to be higher, car loan interest rates to be higher, and credit card and et cetera to be higher.
Mm-hmm.
Got it.
Or they just take money from the deposits and they lend it out to people as well too, or that too. But yeah, most of it's the internal federal funds rate where you're borrowing funds from the Fed, and it's a cost you have to calculate. But the problem is you get into mismanagement. So when lending is easy to do. The federal interest rate's low, so everybody gets lends and takes loans, right? Because banks offer these low interest loans. When the federal interest rate goes up, people end up not being able to access the fund to loans, so they have to pull on their money that's in deposits. Silicon Valley Bank did not use adequate risk management to realize that they had all their money tied up in long-term assets and that they needed more money because people were going to start requesting more money from their deposits. And the federal deposit insurance only requires that you keep 10% of everything that you have on, no, federal regulation only requires that they keep 10% of what they actually have. So if you deposit $100,000 in the bank's only legally required to hold $10,000. The other $90,000 they can go distribute however they need to, loans, whatever, money making ventures, investments in companies, investments in equities like companies, stocks and stuff like that, investments in bonds, etc. Whatever it's supposed to make a return for the actual bank. So they put it in Forex market and make 50, 70, 80% off of your money, and they pay you 0.01% interest. So you can go look up just research JP Morgan Chase Forex revenues, and you'll see that they're making like 60, 80% per quarter off of $1 trillion in Forex. So don't say you can't make money in trading, because the banks do that.
And
But
2021 they made $127.2 billion.
Billion or trillion? Because they put $1 trillion worth of money in Euro USD per month.
Yeah, I think it was billion.
Yeah, no, they trade your money just like you're doing now. The only thing difference is you're just employed by the bank. All right, let's take a look at it. Look at gold. So talk me through what you were seeing, what you were thinking.
4 hour, I see it chopped on the 4 hour. And I went into price on a 15-minute time frame. Or where do I wake up at? You probably go to the left a little bit.
You would be, you said you're up at 4 a.m., right?
Yeah. On the charts like 4:20, 4:30.
This is 4 a.m. Pacific.
Okay. Yeah, so London shot down. So, and I know, the ADR for gold is only 220 pips, 200 pips. So it was very choppy. And it didn't break. Okay, yeah, I'm right here. So it was just choppy to me. I got 1 hour, but I didn't expect for gold to just shoot down like this, like it did at all. It was very choppy to me.
Well, there were a lot of comments that were going on. What was the news that I saw today? Hold on 1 second. Yeah, you have the ECB President Lagarde that was speaking. Even though it's Euro, it's still, they were talking about CBDCs. CAD announces CPI. That doesn't really affect gold as much, but it definitely has some spillover because the dollar and CAD tend to correlate sometimes. Then you had existing home sales, which came in better than expected, way better than expected. That was at 9 o'clock. Gold here was 9 o'clock. What's your 9 o'clock news? And you had Treasury Secretary Yellen speaking. And then you had a slew of other things that's just raw banking. Right now, the gold is responding to what's going on with the banking crash, or the banking crisis, I should say. So.
Yeah, you show me where you would have entered in here.
I didn't have, let's see. Only trade that I saw was this one right here, and I would have broken even more than likely. I wouldn't have kept trying to deal with it.
Wait, but there is no zone right there. Why would you take that trade? Because are you anticipating a 15-minute zone to be played out?
No, this is a zone for me.
Oh, exactly.
Mm-hmm.
Wait. Oh, because it broke. Oh, yeah.
So that's a zone for me, but my entry would have been somewhere over here. But I would have just probably broken even looking at it. I don't think that there was anything. I don't try to trade price action that be too choppy.
Oh, I see that zone.
So I likely would have just sat that bad boy out, and then it like everything's in preparation for tomorrow. So the market's making very, very wild moves. Anticipation that we're going to get an interest rate hike. And then also the other pieces to it too is that we're going to get interest rate hike, but it's more or less the projections. That's the thing that's the most important thing for tomorrow. They want to know what is going to be the projections of the federal funds rate, because that's what the market more cares about. If we get into that red area, it's going to be pretty bad for the market. So, but gold is the most affected by this, because if you haven't, I'm sure you've noticed too about Bitcoin jumping up. Well, if people don't trust the financial system, they're going to take their dollars out of the bank and they're going to put it in things that they think will appreciate in value. That's why gold's going up. If they're also putting it in Bitcoin, even though Bitcoin's becoming harder for you to be able to access anyways. But if you let's look at the days in crisis, right? So the first day of this whole debacle when it came to the banks was March the 7th. That was the Tuesday where we started hearing about issues. Then we had the Wednesday, we had the bank contagion. Then we had Thursday and Friday where we had more banks that were collapsing, where they were curious about SVB. We already had Silvergate go down. Then we had Silicon Valley the next day. And so just look at how the market just kind of took off, right? You can really put it on the line, pinpoint. This was the day where they started. This is the day where they started the whole process, and then next thing you know, everything went. So, does that make sense, though?
Oh yes, yes. Where you would have entered, how would you know that price won't come up and retest?
And retest what?
Like just to go up and just do a pullback even more on that on where you would enter. Because I seen that, but I thought maybe price would come up even more.
But for what?
On gold on a 5-minute. Yeah, like right there, because sometimes a pullback is more.
You don't.
Excuse
you have
me?
to. So you won't know those things. You don't know if it's going to do that or not. Like that's the risk taking in trade. But that's why you have to. I structure all of our rules to give me something that's going to be a high probability setup. And what I mean by that is that 8 times out of 10, when I take my entry, I'm not worried about it pulling back, because I've seen that over the course of 100 times, 80, 90 of those times, it's going to go in my direction if everything else aligns as need to. If it pulls back, great, then I just adjust. But what you're asking is more of a prediction, where I'm saying you need to be more reactive to whatever the market does, because you don't know these things. And frankly, you don't need to know what the market's going to do to make money. You don't have to predict a single thing. All you have to do is say, all right, here's the area. If it comes back to it and it gives me something I'm looking for, then I would take it, because likely it's going to play out to my favor anyways.
Hey, Brian, I got a question.
Mm-hmm.
So I've noticed as I'm going through these trades, just about really small details that I need to make a rule for, basically.
Mm-hmm.
And I've been trying to ask myself the question why more when I'm on the edge of time frame, and I'm following structure and I'm waiting on the 1 minute to get an order flow realignment. Previously, what I would do, I would take the high and the low with my fib, but I noticed that well, I'm asking myself the question, why am I not taking the structure points? So sometimes when you, in this example, if you have, a high and then, you get a chalk, but that high was wicked above, I would take the wick and then the low instead of taking the actual structure point and the low. Do you know what I'm saying on the entry time frame?
Can you show me an example?
Yeah. So if you honestly just go down to the 1 minute
Okay.
right here in this supply that you're talking about.
Okay. Let me turn the replay on so I can get some of it back.
And you can just
Okay.
find some sort of chalk just as an example. It doesn't have to be something that you would take.
Okay. It may take a minute because I picked the consolidating price to show
That's
an
fine.
example.
That's all right.
Very smart, Brian. Very smart.
Okay, so right here,
Uh-huh.
for example, okay, well, I mean, there's still not really a chalk that I would take.
See if it goes back.
All right, let's just say that, for example,
We'll pretend like there's something in here chalks. Then
yeah, let's just say that that's our supply. Okay, yeah, let's just say that something in there chalked. You see the higher high mark, the most previous higher high mark that you have? Yeah, that one up there. And then you see it gets wicked above, right? Yeah, so previously I would take that high instead of just taking the actual structure point with my fib. And I don't know. I'm asking myself kind of like, why would I be doing that? Like, shouldn't I be taking the actual higher high and the actual lower low
I mean,
and not the highest point?
well, it goes back to the comment I made before. Like, you just got to, whatever your rules are, you have to base it on something, right? So, are you basing your entries on market structure? Are you basing it
Yeah.
on supplier demand? Because then
Market.
that will decide what you should be doing or what you're not doing. So, for instance, if you're saying, all right, everything I do is based upon market structure, which is the reason why you'll notice that my market structure indicator goes with me on every single time frame, because everything I do is based on market structure. So, in my rule set, if I was to pull off of this high, that would be incorrect because that goes against my rules. It does not mean that it's the incorrect thing to do, because I know some people who do this. I know some people that would turn this whole thing off and say, okay, they're going to look at price like this. And you know what? They may decide to pull this as their fib. There's some people who will look at that and say, all right, that's my break.
Okay.
But what it is that you have to decide the reasons why everybody takes losses or takes wins is in the details. All right. If I told you I have $1 million for you, what would you say?
That's amazing.
But
I mean, if you have $1 million for me,
I didn't tell you how I was going to give it to you, did I? I
no,
just said
yeah,
I had $1 million.
it.
That's great, but how do I get the money? If I tell you I have $1 million for you, go to Chase Bank, talk to Jackie, she's my teller, and she will transfer it to your account, what would you say?
I would say I'm gonna go now.
Exactly. The difference is a small detail. So what you miss in your trading is oftentimes, I see this a lot where people are like, oh, well, the probabilities weren't in my favor, or the market did what it wanted to do. Yeah, that's great. But why? If you can figure out why, then you can figure out something that's a reoccurring pattern. You can either see if it was something random or if it's something that's reoccurring. And what you made was a great deduction. Hey, I'm not following market structure principles when I go to my entry time frame. I'm just picking, certain highs and lows. And now I want to see if that's effective. Because I can tell you right now, if you got in a car and you didn't put gas in it and you would just say, oh, the car is messed up, I'd probably tell you might want to put gas in the car, because as small of a detail that is, it's an important factor as to why the car is probably not moving. And it could fix a problem that you have. Or you could just chalk it up and keep selling cars until you find a car that actually had gas, and then eventually figure out maybe down the road, maybe if I stop buying a new car every time it runs out of gas, I'd have a car that drives. Like small details are the biggest things that in your trading that's going to make the most impact. But if you don't, I'm glad you said like you ask yourself why, because that's the question I always ask myself. I take a loss. I'm like, why did I take a loss? Did I follow my rules? Okay, cool. Do I see this as a recurring pattern? If I see a recurring pattern, sounds like a rule that I need to add.
Yeah.
This following this rule gives me a positive result, because you could say, all right, I want to be able to safely fly, right? But if you don't have wings on a plane, you can't really go nowhere. So if you're not equipped with the right things, it's just never going to work. Like nobody just walks outside, puts their arms up and jumps, and it's just flying away. You need, like there are certain things that you need. So the rules should give you a positive expectation. If I'm in an airplane, like a Boeing 737, my expectation is that we'll probably safely be able to get to our destination, hopefully on time, but depends on the airlines. But those expectations are created through rigorous amounts of practice and testing, right? Before they send a plane in the air, they test it, they do flight simulations, they do mechanical inspections, all this to prepare for a flight. So in your trading, before you get into a trade, how are you preparing to put yourself in the best win case scenario? Like, for instance, like P-Money, like you mentioned, you asked, like, how could I catch this trade? Probably couldn't. Based on my rules, I know that I likely would have gotten in somewhere around this area. I would have broken even. I wouldn't have even tried this, because I know that a majority of the times when I take trades in something like this, I'm just going to lose. So I don't even attempt it, because if it goes on without me, great. It went on without me, right? This was that 1 time out of 10, or that 2 times out of 10 where it actually worked. But I know the other 8 times out of 10, I'm going to take a loss. So I don't want to force a trade in an area where I've known for a proven track record, it's not going to be in my best interest. Does that make sense?
Yeah, it makes total sense.
So, like, sometimes I like asking the question, how could this work? And I also ask this question, well, why should it work? And if I can't answer the why, then a lot of times I'm just like, oh, you know what? I'm not going to do it, because I really want to be able to make sure that I can consistently get the same result over and over, right? Like if you consistently put gas in a car, get the car serviced and whatnot, it should drive for at least 100,000 miles, hopefully without any kind of big issues. But
Can we can we go over your GU trade, please? And your GJ?
Oh yeah, hold on 1 second.
Your 20 Rs for the record, 20 plus Rs.
Let me see. All right. Here was GJ. I have to go back. Sorry, guys. Okay.
You traded London, huh?
So this was the 4-hour at the time. Price failed twice to take out this low point. So at this point, it made a strong, sharp move down. And then it looked like like I said, it didn't take out this low. So now at this point, I really don't think this lower high is going to stay. And I'm kind of expecting for it to go, unless I get shown something different yesterday and tomorrow anyways. Market came down. It made BOS here, makes a chalk up here. What's it called? Oh, it's updated version. There we go. Price makes a strong move for me. And then I waited for price to give me a clean move. And then I took my entry off of the seconds time frame, but it gave me a chalk, I believe. And then from there, I just kind of held it through all of this mess until it continued to go upwards, and kind of keep my limits around 10R. I don't want to take a trade no more than 10R. But yeah, it consolidated for a little bit in the area where I was expecting some consolidation, and then ultimately it took off after that. So it made more of a sharp reaction, and it gave me a little bit of consolidation afterwards, but not enough for me to decide to close my trade, and I took it from there.
So I see where you took it on that blue candle. I think that's where you took it. The candle to the left, two to the left, the wick, like the pin bar. Why didn't you take it there? Was it not a chalk there inside that candle?
On this one?
Yes.
No, because I have a different rule that of something that I have to apply on the charts, where it makes me wait until it crosses a certain point where I can't take trades. So that was in a zone that I could not take trades into until it broke out of the zone.
Okay. Can I see that zone on a 1 minute time frame, please?
This zone?
Yes.
Give me 1 second.
No, just the zone just that the 15-minute zone that you.
Oh.
Yeah, I was going to see that zone.
Oh, okay.
1 minute
Gotcha.
time frame. Okay, well, never. Okay. Well, never chalked.
Yeah, my entry was, I think, based on 15 seconds, if I remember correctly. Is it 15 or 30? 15
and also,
seconds.
I remember Rob used to say like sweep the highs and sweep the lows. Does it go in the same order every time, or does it differ from a downtrend and an uptrend? So just say price coming into a demand zone. Does a sweep high and a sweep low come first, or sweep low and sweep high come first, or just different every time?
It's not the same every time, no.
Mm.
But I don't know, I've seen so many different variations of that. So what some people mean by sweep the high, sweep the low would be something like, I'm still trying to find my draw. This would be, some people consider sweeping the highs because you broke here, had a lower low created. And this would be, this would be sweeping the lows, and then this would be sweeping the highs because you broke that. Some people also would consider something like this sweeping the lows, and they would say this is sweeping the highs, and they would get in something like this.
Mm-hmm.
Or some people would say, because it depends on how you look at the market, this is sweeping the highs, this swept the lows, so I'm going to enter the trade. Like right here, something like that. Rob, the way that Rob was kind of meaning it, to be honest, you'd have to ask him on that one, because that's more of a looking at it from liquidity, but that's not something, for instance, that's one of my strong suits. So that would be a good question for Solomon, or a good question for Rob on those pieces, because I don't trade liquidity. I don't understand it, I don't even understand how people explain it. It makes no sense to me.
Mm-hmm.
I just know kind of certain things that they use, like they call this, for instance, trend line liquidity. They're going to call this trend line liquidity. Like right here, all of this, they call that trend line liquidity. Or they'll say that they have equals. So they'll say equals like this is liquidity. But I don't understand the why behind that. It does not make any sense to me. So, like I said, I wouldn't be the one to explain to you on that. But there are some, I think there are some videos on the YouTube channel. I'll see if I can find them. Or I think he may go into his explanation behind that. But
please, if you have it, please.
Yeah, go check on the channel and look on the course, because he has some stuff on like chalks and flips, and it'll explain, I think, on those that, and then he also has some liquidity videos on there as well too. So, but or ask Solomon too. Solomon may have a good idea on that one.
I will. Okay, can we see GU, please?
Yep. Give me 1 sec. Where is my?
You cold for what you just what this indicator you made just
Oh,
cold.
oh yeah, this is the first of many to come.
Cold for that one.
I'm keep myself busy. So here was like my GU trades. So didn't like the fact that market was moving sideways, and I just more or less had to remember a rule that I've not been practicing very well in my trading. So I'm back testing to become more disciplined about it. But essentially, my rules make sure that I don't take trades in the area like I showed you because I know the outcomes. So I was waiting for what I considered a strong move away from this area to give me a room for me to enter, which happened here. And so then I think this was also a second century. Yeah, it definitely was. So I ended up catching the second entry. The market made a strong move upward. The only problem was it gave me consolidation right at this high. So it slowly came to a spot where it possibly could have taken out this high, but it didn't. And then I saw signs of consolidation. So part of my rules have is I just close my trade. So I get the sideways movement. I close somewhere around here. That gave me a 4-hour trade. Then I came back to look and say, all right, do I get a sharp move away? Which I did. So I got another sharp move away, which gave me another chance for me to consider entry. And this also was another second entry here. And then this time I decided to hold through since I'd already collected 4 on my first one and then be able to take it. And essentially price went up for about 10R. So I was able to catch both moves. When it came to my 4-hour time frame, my whole bias the whole time was just that price was going to go up because we were in a region where I was expecting for price to slow down at, which it did. And then I was expecting for price to break through and just follow in the expectational order flow that I had, which was that it would finally break out of consolidation and go into a bullish trend, which it did. So.
And why are you this sharp movement? Why are you looking for a sharp movement pullback? What does that signify?
Momentum. It's just the most important thing as part of my plan. I don't have momentum in the market. I'm entering where there's consolidation. So what's more important to know is know where your strategy doesn't work and compared to where it is. So I'm a trend trader. If there's no trend, I have nothing to trade. So I don't try to take trades in things that are not trending conditions. And I've just, like I said, I've seen it enough in backtesting. I know what happens when I take trades in consolidated markets. They end in losses or break evens, and more likely it's going to be a loss or a break even. So that clarity is to find, like Calvin asked a question earlier, is to find details of what I know. Like I don't try to trade through everything. I just try to trade through things where I have the best chance of success. And because I've backtested enough and I've seen enough examples, I know where it's likely not to happen, if that makes sense. So.
Cool. Thank you.
No problem. All right, guys. Appreciate the questions. Hope y'all end up having a great rest of your trading week. Be careful on tomorrow. A lot is riding on what the Fed Powell has to say and what they believe will happen next. So be careful in your trading, guys. Make smart decisions and smart choices. If y'all had questions that you didn't get a chance to get answered, feel free to ask within the Discord between the student leads and myself and other coaches. Will definitely answer and respond to it. And also, guys, if you want to have like more visual questions, definitely hang out on Thursday. We'll have another phone call like this. But I will let everybody know once the video is up on YouTube. But outside of that, guys, I will catch y'all later, and I will talk to y'all soon.
Peace.
Peace.
All right, thank you. See you. Wow.